Hey everyone, welcome back to the Mark Loeffler Experience. Today, we're going to be talking about the headlines and then the real story behind them. And how much truth is there to these headlines? Are we crashing? What's going on? Like, what's happening in this economy? And again, what are we going to do about it? Because that's the most important thing. Like, we can go ahead and do all this research, and if we do nothing, it means nothing. It just means that you're going to be really informed for the backyard barbecues that are happening right now. I've had so many people say this to me, Mark, we didn't even know you were in real estate. We didn't know you had a real estate team. Well, yes, I'm in real estate. It's Catano Loeffler Real Estate Services. And if you are looking to buy a home, sell a home, or invest in real estate in Hamilton, Burlington, St. Catharines, Brantford, Oakville, definitely do give us a call. We do work in Toronto a little bit too. And also, just got licensed out in Alberta to sell multifamily. So if you're looking for an apartment building out there or a commercial property, I can definitely help you out. Let's see the top highlights. Ooh, a bubble, eh? Scotiabank's very pessimistic outlook is real estate prices rise 10%. So Scotia thinks that prices are going to rise 10%. We'll go through some of these after, but so Canada GDP per capita is still down. It may indicate a drop in living standard. All right. U.S. home sales plummet. Inventory rises to the highest level since 2008. I don't know if you remember what happened in 2008. There was a little bit of a financial crisis in the U.S. and obviously there was going to be a lot of inventory because nobody was buying. What do people expect when interest rates go up 100%? In like 2 months. How much? And so it's funny though, like different headlines for this. Scotiabank 10% rise year over year. BMO, how much will Canadian real estate crash? Stability requires a big correction. I don't know if you guys remember, we talked about a Scotiabank report on this before. I think Scotiabank has some of the best people predicting what's going on. Which Canadian markets can you afford? Not many if you're in the middle class. Literally, I think there was like 10. And maybe only like 2 places you want to live. Just saying. This week's top stories. Canadians, real estate has never been more overvalued and prices are falling. Canadian mortgage costs are surging and renting can make more sense. Canadian HELOC debt is rising at the fastest rate since 2013, all with variable rates. Canadian borrowed another $14 billion, and that's a slowdown. Canadian real estate prices 38% overvalued. Largest trend deviation in 40 years. It's BMO again. Anyways, so these are the headlines. And by the way, and I gotta say this every time because I know I'm gonna get somebody comment down below, wow, where I live, real estate prices haven't gone up that much, and I don't think, it's true. This is very province and spot specific. This is in Ontario, BC, Nova Scotia, a little bit in like New Brunswick, somewhat in Quebec, but not the prairies. This isn't a problem in the prairies right now. So you understand, like that big wide mass of land, not that many people, Golden Horseshoe, doesn't feel all that crowded, but that's people want to live there anyways, and we're not building enough homes there. Okay, Canada's real estate bubble is finally beginning to unwind. Everyone wants to know how low it goes. Well, if you've been watching here, I don't think it's going to go that low. The only other Canadian housing bubble nearly this size took 15 years to recover. That was in like early 90s to early 2000s. BMO found that Canadian home prices have increased about 3% a year since the 1980s. Roughly reflects inflation. Blah, blah, blah. So they're basically saying that if home prices stall and income continues to grow, prices need to drop between 10 to 20%. And they're not giving any, like, we're already down 20% from the peak. Like, we went up 2 months, stupid, 25%. We're down 20% since then. Who knows? Like, we're going to be, like, we'll have another video out next week with the May price numbers, and we'll see what happens. I'm going to tell you they probably are, they feel like they're leveling off. That's just anecdotally to me, but they feel like they're kind of leveling off. We may have had like a little decrease, but I don't think we've had the cliff like we had. And by the way, when you look at this in the long term, when we look back 4 years from now, and I'll link this video if I'm still making videos on YouTube, if you guys are still watching, that I'll show you where this is just a little blip in the thing. Because this is what, 2017 was just, now it's just a little blip. So a lot of people are talking about 2008 crash. Don't expect a financial crisis like the US housing crash. Obviously that was built on fraudulent activity and, ninja mortgages, so no income, no job, no problem. We don't have that problem in Canada. We're a lot stricter on our mortgage guidelines. For the most part, it's a very, very small portion of all the mortgages out there. Which Canadian real estate markets can you afford? So look at that. Oakville, Milton is the most unaffordable place to live in Canada. Followed by Lower Mainland, Fraser Valley, Vancouver, Toronto, Mississauga. This was surprising to me. This was surprising. Hamilton, Burlington. I mean, I'd like to see about breaking out those numbers, but of course it's it's Real Estate Board of Hamilton, Burlington, so they don't really break them out. But I mean, Hamilton average sale price was, I think, what, $850, $890. So, anyways, that surprised me. I thought that would be lower. Victoria, Guelph, Barrie, like you just say Niagara, decently unaffordable. Like the median budget is at $100,000 income, which average household income is about, like, per person is $54,000, so that's $108,000. They use $100,000 with a 20% down deposit. Look how unaffordable Peterborough, Kawartha, Bancroft, for goodness sakes, is unaffordable. Calgary is pretty much on that bubble, and I gotta tell you, income out in Alberta is better than income in Ontario, for the most part. For the longest time, Windsor was a very affordable city. Not that much anymore. I mean, to be in Ontario, you gotta be in like Sudbury, North Bay. Those are really the only two, or farther north, I'm assuming, right? They're not using those stats. Nova Scotia, this does not include, this is all of Nova Scotia, including Halifax. But it's funny, one of the commenters down below saying you can't get high-speed internet at anywhere that is affordable. Edmonton, average sale, $371. It's got a lot of room to go up in my opinion. Look, there's Winnipeg. Moncton, still actually decently cheap. It's had a huge run up, but if you're making $100,000 a year in Moncton, you're probably doing okay. I think the real issue with some like New Brunswick and that is jobs. I mean, I don't know, unless you're working from home and you're going to work from home the whole time. I don't know what kind of work they have, industry, tech, anything like that, right? Saskatoon, decently cheap. So we talked about that, prairie provinces, right? Prince Edward Island, Quebec, Newfoundland. So when we look at this and we say, oh, this is a Canadian problem, well, you tell me if this is a Canadian problem or if this is really a Ontario and BC problem. BC has issues because, well, there's these things called oceans and things called mountains, and they make building very, very difficult. Ontario has this thing called leadership, or lack thereof, which, and this is not indicative of local anywhere or provincial anywhere, they just don't work together to build homes. It's very, very, how do I say, not a NIMBYism kills affordability in Ontario. You heard it here first. Noel, you need to watch this video. Mary, send this to him, okay? Largest trend deviation. You know what? I'm tired of BMO. BMO, you can go suck eggs. Let's see Scotiabank. Let's see this. So, their base case, so this is what they think is going to happen. Prices rising year over year 16.6%. They, even with higher rates, they've accelerated. And this may be due to inflation, right? I don't know. Like, it costs more to build everything now, so why wouldn't prices go up? I know that obviously with interest rates and all that fun stuff. Best case scenario, prices rise nearly 20%. Worst case scenario, prices rise 9.8%. This is our pessimistic scenario. I do like this. I mean, so there's no real, I'm going to have to go to the Scotiabank report to read it. I haven't read it yet. But in the bank's eat your face off, buy zombie style pessimistic case, the prices are actually rise. Not a little either, but an increase of 9% over the next year. It's bubbly for mom and pop investors to think downturns make them rich now. It's another level when big banks sees the system working that way too, assuming economic downturns lead to 3 times the long-term growth average. Well, so, better dwelling, here's the thing. Any news wants to put a pessimistic slant on things because you're going to look at the headlines and be like, oh, I want to read that. So how do they say, oh, we think prices are going to go up 10%? Nobody's going to read that. People are going to read the 38% crash, or we need to do, anyways. Right? People, I'm sure if we saw views, judging by comments, they've had 2 comments. Whereas the one where affordability or the 38% down, they have hundreds of comments on them. Tells you how many people are reading this. That's what their job is people don't, like, if I don't put a negative click on there for clickbait, you guys don't watch my videos. I apologize for the clickbait once and again, but it's your fault. I'm really agreeing that I'm thinking that we see probably, I don't know if, I think they're pessimistic is probably right in line, 10%. Obviously, we're going to see a 50% rate increase in June, but I think that's going to slow farther and farther. I think there's a real worry of stagflation here, and if they keep raising rates, they're going to put us into a recession. But I don't think that kills the housing market. I think we have structural issues in Ontario, in BC, that are propping up these markets. And until those structural issues get fixed, I don't see how we're going to see this crash. They're always going to help the demand side. They're still helping the demand side while talking about fixing the supply side, but they don't do anything on the supply side. It's kind of infuriating. Anyways, everyone, I hope you guys enjoyed this type of video. Comment down below if you did. Again, we're having our next meetup June 20th. We'll put the Eventbrite link down below, and then we have one July 18th and one August 22nd. $15. As always, proceeds go to charity. We're happy to have you there. We had a great meetup last time. And guys, it's nothing special. It's just every investors getting together, talking about real estate, talking about stocks, talking about whatever the heck they want. It's a social setting. It's just come, hang out, get to know some people, get to know some subscribers, and just chat about investing. All right, everyone. Catch you next time. Have a great day.